The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 2 August 2019. Well, I'm going to cover kind of the entire spectrum here, mostly verbal today. But the falling commodity prices are hurting the Australian and the Canadian dollars, and the U.S. dollar is actually hitting a new high. Gold did a key reversal, huge amount on Thursday after the Fed's announcement. It actually went up $50 during the day, basically. So two major events this week have highlighted things from a global perspective. As I just said, Mr. Powell on Wednesday emphasized the Fed was lowering its short-term rate to partially offset weakness in foreign markets. And Trump also announced that the Chinese tariffs to start in September we're going to increase about 10%. Crude oil fell off nearly 8% on that news, and a general retreat in the commodity markets took place. However, as I mentioned, the safe haven gold was a big winner. I want to pause here for a moment and state what I've been saying for quite some time on most of my interviews, which is that the gold market and the U.S. dollar market would both go up at the same time. And this is contrary to many of my peers that say that they're basically opposite ends of a teeter-totter. One goes up, the other down, and vice versa. Not true, especially as we near the end of this fiat regime. Lots of angst in the market. European currencies are hitting new lows, and as I said, the U.S. dollar new highs. And this shows that we're probably going to see more inflation down the road in the U.S. So what's happening here is happening on a global basis. Basically, the U.S. economy, as I've done week after week after week on these podcasts, I show very important, vibrant news, a lot of times out of the mainstream like Reuters and Bloomberg, that things are not as rosy as painted by the mainstream press, mostly in the United States. We are in a contraction. Things are getting worse, not better on aggregate. And if we had such a great economy, why would you lower interest rates? So beware that the CRB commodity index is lowering the pressures on the currencies, especially those tied to commodities like the Australian dollar. And we are going to have to see what takes place between now and the end of the year. Gold market strong and will probably continue to get stronger, although the commitment of traders is a feature used as a tool to determine usually when a market is overbought or oversold. Gold is definitely overbought basis the COT. However, markets can stay overbought for a very long time. And I am waiting to see the first profit taking that occurs with this new bull market. When it occurs, how much damage is done. And we kind of witnessed that in a mini fashion this week with gold selling off after the Fed announcement, which is what I expected. Gold moved down intraday to 1,400 basically and shot right back up from that level, as I said, almost $50 in one day. So certainly a lot of strength in the gold market, and that will continue, I believe, for some time. In other news about gold, Glint has established gold as money and is launching a gold-based debit MasterCard, an app in the United States following a successful launch in Europe. This is something I want to make aware to the community that follows my work. You can go to the website and find out more details. Basically, I'll continue on this a little bit further. The U.S. boasts a $7.6 trillion annual gold investment market in gold bars and coins that has been locked in vaults and unable to use this money until now. This isn't exactly true. There's gold money. There are some other gold-backed debit cards. There's one that I have talked about in the past that is a debit card that's based on precious metals and now cryptos as well. That's actually here in Spokane. It's not run by me. It's a friend of mine that started this years ago. So that's a little bit of a misstatement. Going forward, gold has historically been a better store of value than any government-created currency, which typically erodes over time. One of my main messages since 1970, the U.S. dollar has lost 80% of its purchasing power due to inflation, whereas over the same period, if you held your wealth in gold, your purchasing power would have risen 505%, inflation adjusted. In 1970, a cheeseburger would cost you 55 cents in the U.S. In 2018, that same cheeseburger cost $3.47. I'd like to know where he's getting them because they're usually around $8 for me. Excuse my digression. Due to the increase of U.S. annual average inflation, the decreasing value of the U.S. dollar, in 1970, a gram of gold would have bought you 2 cheeseburgers, whereas today a gram of gold would allow you to purchase 12 cheeseburgers. So you get the idea here. I have not investigated this further. I will later on. I don't know what the restrictions are, but you can certainly look it up on the web and find out more information about this debit card that's based on gold. So I'm going to keep it short this week. I did just finish the publication of the Morgan Report. I should say finished editing it. It will be published probably tomorrow, Saturday, the 3rd of August. A lot of information about the current markets, the Committee of Traders reports, why gold is harder to determine, and why the physical market in gold may have finally taken the upper hand. It certainly did on a day, but one day does not make a market, and why that is. And also we go through a lot of we'll call lagging stocks in this market. But the perfect client for the Morgan Report is somebody that is a stock investor, has a stock account, either self-managed like E-Trade, Ameritrade, you name it, there's so many of them out there, or a stockbroker that works with them and is familiar with basically financial terms and enjoys stock investing. That would be a perfect client. And within that, the benefit is that we do the research and you execute. We do top-down research on all the commodities, basically. We do emphasize the precious metals, and we give specifics in the top tier, mid-tier, and speculative categories. You determine your risk level because a lot of fund managers do follow our work, probably more institutional types and fund managers that follow us than most in my category. Looking over my shoulder, I show you the trades I do, which is not that frequent. So if you're looking for something to trade every week or every day, this is not the right place for you. I do position trade, and which means a fairly good sized position, and try to hold it for time, but the market knows more than anyone, so sometimes it's a 2-week hold, sometimes it could be stopped out very quickly. Other times, like I did in the last big run in silver, I got in at 19 and got out at 48. If you add up that on a leverage basis, certainly a lot of people are very happy about that one. Updates and alerts, those come right to you, either in your email, or we have a system that we've developed that goes direct to your desktop if you're so inclined. Research, I'll put mine up against anyone's, and new discoveries. We have this one that's on the main page of the website, which is like electronic waste, which is far superior in grade to any gold mine out there by far, and yet it's a very unknown subset. Morgan Report readers are about the only one that know about this company, and it's been languishing lately. It's been all over like any of these small micro cap companies. It's had its day in the sun, so to speak, gotten a bit ahead of itself, fallen back, and gotten down to where people were really discouraged with it, but I encourage them to hold on, bounce from that level, and now it's back at kind of the mid-level it's been over the last few years, and is still very, very, very undervalued and very, very, very unrecognized. As I said, very few people outside of those that are members of the Morgan Report even know about this company. Last thing is that I still answer questions directly to anybody that is a member of the paid Morgan Report, and you're limited to 2 per month. I cannot do a portfolio analysis for you, and I cannot give individual advice, but outside of that, I can ask just about anything, answer just about anything that you ask of me. So that's it. We are seeing a shift in the equity markets to basically the commodity markets, but primarily the precious metals. I've been saying for a long time, if you've listened to any of my interviews, and I don't always say the same thing over and over, but one of the main themes has been there will be a time when the commodity sector itself, you can measure it by the CRB, actually is not doing that well, but the money metals, gold and silver, you could count platinum, palladium in there as well, are doing quite well. And also to reemphasize what I said earlier in this podcast is that the dollar could and would be going up higher at the same time gold is doing the same thing. Lots of changes ahead, lots of friction in the markets, lots of angst, lots of unknowns, lots of uncertainty. And the Fed's basically locked into a situation that they really can't get out of. So this lowering of interest rates might make the markets feel better, but as far as having any substantive value, as far as really getting growth reignited in a significant way in not only in the U.S. but in the global economy, forget about it. It's not going to happen. So David Morgan with you. I'll be back with you next week with another weekly perspective. Hello, I'm David Morgan, publisher of The Morgan Report, and as some of you may already know, The Morgan Report is about money, metals, and mining. In fact, we cover all resources, from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in The Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter. To-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You'll understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.